Ever wonder how some people seem to find those monster stocks before they take off? It's not magic, and it's not just luck. It's about knowing what signs to look for. Today, I am breaking down the 10 key signals that can help you spot a winning stock before everyone else piles in. Stick around, because the last one is the secret sauce to finding those true 10 baggers. First up, strong revenue and earnings growth. This is non-negotiable. You want to find companies that are consistently growing their sales and profits quarter after quarter. Are they growing faster than their competitors? That's a huge green flag. It shows their product or service is in high demand and they're capturing market share. Second, the company needs to be riding a powerful tailwind. Think about massive trends like artificial intelligence, clean energy, or healthcare innovation. A fantastic company in a shrinking market is like trying to swim upstream. You want a big, growing market that lifts the company up with it. The best investments are great companies in great industries. Third, look for a competitive advantage, what Wall Street calls a moat. Ask yourself, what makes this company difficult, if not impossible, to compete with? It could be a powerful brand name that everyone trusts, a portfolio of patents that block out rivals, a network effect where the service gets better as more people use it, or high switching costs that lock in customers. A wide moat protects future profits. Fourth, you need high-quality management. Great leaders are the captains of the ship. They think for the long term. They're smart about how they invest the company's money, and they're transparent with shareholders. I like to see founders still running the company or executives who own a lot of stock. It means they have skin in the game, just like you. Fifth on our list is improving financial metrics. This is where you get into the numbers. You want to see rising profit margins, which means the company is becoming more profitable. Look for strong and growing free cash flow. That's the real cash the business generates. Also, check for low and manageable debt. A company drowning in debt is a risky bet. Finally, metrics like return on equity, or ROE, tell you how efficiently management is using your capital to generate profits. Number 6 is a bit more technical, but it's crucial: early signs of strength in the stock chart. Before a stock makes a huge move, it often leaves clues. It might start making a series of higher lows, meaning buyers are stepping in at higher prices. You might see a period of tight price consolidation, where the stock trades sideways on low volume. This is like a spring coiling up before it explodes higher. And watch for above-average volume on days the stock goes up. That's a sign of accumulation. Which brings us to number 7, institutional accumulation. The smart money, mutual funds, pension funds, hedge funds, they do their homework. When they start buying a stock, they don't do it all at once. They build a position quietly over weeks or months. You can spot this by looking for an increase in the number of institutional owners and a steady rise in trading volume, even before the price makes its big breakout. Eighth, the business model should be simple and scalable. Can you explain how the company makes money in a single sentence? If it's overly complicated, it might be a red flag. Then ask, can this business grow 10 or 100 times bigger without its costs exploding? A scalable model, like software, is incredibly powerful. Ninth, look for positive catalysts on the horizon. What could happen in the near future that would get the market excited about this stock? It could be an upcoming earnings report that's expected to be a blowout, a game-changing new product launch, a key regulatory approval, or expansion into a new international market. These are the triggers that can ignite a stock's run. And finally, our 10th and most important point, the stock should still be a bit under the radar. The biggest gains are made when you buy something that is misunderstood or ignored by the majority of investors. By the time a stock is on the cover of every magazine and all over the news, a lot of the easy money has already been made. The real skill is identifying that quality and potential before the crowd does. So there you have it, 10 signals to help you hunt for the next big winner. It's a framework that combines business quality, financial health, and market sentiment. Put in the work, do your research, and you'll dramatically increase your odds of success. Thanks for watching, and if you got value from this, be sure to like and subscribe for more. I'll see you in the next video.